So hi everybody, welcome back to SSCMA classes. So yes, we are going to resume our direct taxation classes and we are going to continue our lecture assessment of company, and this lecture we are going to cover one illustration of as per MAT provision. Okay, so yes, let's get started the illustration now. So in this illustration we have to compute of income, total income and tax liability of XYZ Limited. So the question says XYZ engaged in manufacture of fertilizers since 1st 4 2012. Okay, so let me underline these things, and its statement of P&L shows a net profit. So they have the net profit of 700 lakh after debiting and crediting, after debit and credit of the following items. So yes, let's go the format of MAT provision now. Okay, how we are going to compute book profit as per 115 BG and all. Okay, so this says about how we are going to add back the things and deduct the things. Okay, so net provision is to be add back, remember? Yes, and there are some of the other provision which is to be add. Okay, and that things comes like income tax paid payable or the provision, okay, amount carried to any reserve, provision for the liabilities other than a certain liabilities. And there is one point in this illustration which is saying about the certain and uncertain liabilities. Okay, so in that case we are going to take the difference. Okay, so yes, then later on losses of subsidiary or the provision for the losses of subsidiary, dividend paid or proposed, but in case of expenditure incurred for dividend, it's not going to be add back. Okay, expenditure related to any of the income which is not subject to MAT. Okay, and amount of depreciation. Okay, yes, deferred tax liability, a provision for the deferred tax liability, provision for diminution in the value of asset, and expenses related to share of the income from the AOP on which AOP has actually paid tax at the maximum marginal rate. And last, amount standing in revaluation reserve related to revalued asset on the retirement or disposal of such asset. From this we have to deduct amount withdrawn from any reserve or provision, okay, and included in the statement of P&L. Then it comes income exempt from the tax which is included in the statement of P&L. Okay, then depreciation as per the book of accounts other than the other than on the account of revaluation of asset. And earlier there was also depreciation, right? Amount of depreciation was to be added. Okay, in this illustration, in the upcoming illustration, we'll know how we are going to compute, how we are going to, which depreciation is to be add back and which depreciation is to be deducted. Okay, yes, so in this case, as they are saying, depreciation which is to be deducted as per the book of accounts, okay, that is to be deducted. Okay, then comes the amount withdrawn from the evaluation reserve and included in the statement of P&L account. Okay, then comes the share of income from AOP, BOI, on which the AOP and BOI have actually paid the tax at marginal rate, maximum marginal rate, and brought forward losses or unabsorbed depreciation whichever is lower. But there is some cases in that case I'll come with another illustration in another lecture where we are going to take both things. Okay, as in this point, 6th point, they are saying either brought forward losses or unabsorbed depreciation, whichever is lower is going to be deducted. But in that particular cases we are going to take both. Okay, means brought forward losses and unabsorbed depreciation both are going to be allowed, okay, which is to be deducted. Okay, yes, 7th point, profit of sick industrial company during the period on which sickness till the year if it exceeds the net worth, okay, and deferred tax asset if it is included in the statement of P&L loss. So basically, can I say this thing which is to be add back, these things are literally similar to the things which is to be deducted, right, for the debit and credit things, okay, particular things. So yes, now let's get started the illustration. Before starting it, गले में थोड़ी सी खिच है, please माफ़ करिए, ठीक है जी, चलिए जी start करते हैं. So yes, in this first thing what I told you was this, okay, that this XYZ Limited, is engaged in the manufacture of fertilizers. Okay, so as per section 35 AD specified business wala, okay, some of the deduction would be allowable, right? Okay, then we'll see in this illustration. So here first point says about the depreciation. This is to be added back. Okay, as they are saying, it is the profit and losses. Okay, means the net profit of XYZ Limited is 700 lakh. Okay, in this net profit we have to add and deduct few particular things, then we'll get the book profit. Okay, so yes, so after debiting and crediting of the following items, which means they have already debited these particular things which they have given us. Okay, in if the question specifies that there is something additional information given in the question, that case that is not clearly debited or credited in the question, right? So that thing is to be adjusted. Okay, so these things is already adjusted, so either we have to add back or credit. Okay, means add or less. Okay, so yes, so first thing says about the depreciation. Depreciation calculated on the basis of useful life of asset as per provision of the Companies Act 2013 is 50 lakh. And this is the normal depreciation. Second point is about the normal depreciation calculated as per income tax rule. So yes, the normal depreciation, ye first wala depreciation is to be add back. Okay, and ye wala depreciation is to be deducted. Okay, because they are, this is calculated as per the income tax rule, but in this case some of the adjustment is to be done. Okay, I'll tell you. Then says, then comes the point, third wala point, employer's contribution to EPF is of rupees 2 lakh together with the employee's contribution. So there are two things. First is employer contribution, second is going to be employee contribution. Now you have to tell me that we are going to take both of them, both employee contribution or both, or there is some specification related to some of the adjustment thing before. Okay, so I'll definitely tell you in the illustration and I'll give you a little bit hint. Okay, so for this employees contribution of 2 lakh for the month of March 2023 was remitted on 8th May. It was remitted on 8th May. Okay, and this was of month March wala. Okay, which is to be remitted within 15th of next month, which is April 15, and by which means by April 15 it is to be remitted. Okay, but there would be 5 days grace time period which is to be extended given to the company. Okay, but if within that grace period, included that grace period, if the employee's contribution is remitted within that time period, in that case this would be allowed as deduction, otherwise it is not going to be allowed. कौन सा वाला? Employee contribution, employees contribution, not employer's contribution. Okay, so yes, let's go for the other. The company appended a note to the income statement that the industrial power tariff concession of 25 lakh was received from the state government and they have treated it as the capital receipt. So first of all we have to identify whether this is capital receipt or not. So yes, this is not capital receipt. ठीक है जी. So we have to determine what is going to be the adjustment in this case. Okay. Next point, fifth point says about the company had provided an amount of rupees 25 lakh being such estimated as a payable to the workers based on agreement to be entered with the workers union toward the periodical wages revision once in 3 years. I'll tell you, if any of the things, if any of the present obligation arise due to the past things, in that case that would be allowable. This is a simple hint. Okay, so yes, you have to identify this, what would be the adjustment in this question. Okay, next come the 6th point is the company had made a provision of 10% of debtor toward the bad and doubtful debt, and the total sundry debtor is going to be 200 lakh. Okay, 7th, which is also related to somehow this point, a debtor who owned the company and the amount of 40 crore was declared as insolvent and hence was written off, okay. So let me mark it. 6th and 7th are somehow connected, okay. So yes, let's go, let's see what would be the adjustment in this case also. Then comes the 8th point, sundry creditor include an amount of 50 lakh payable to A and company toward the supply of the raw material which remained unpaid, okay, which remained unpaid due to the quality issues, okay. An agreement had been made on 31st/3/2023 to settle the amount at a discount of 75% of the outstanding amount. Let me say it again, this sundry creditor include the total amount payable of 50 lakh, okay, which is to be paid to whom? ANC company, okay. But due to some quality issues, they unpaid them, okay. So there was agreement, later on they decided, both the party decided after certain time, like the date mentioned here is 31st/2023, and they are saying that the company is going to settle the unpaid amount, but they are going to get the amount at a discount of 75% of outstanding. So yes, we have to identify what would be the adjustment in this case, okay. So yes, let's go for the ninth part. Ninth point says about the opening and closing of the year, and I'll tell you this point was in this June wala attempt, okay. So yes, the opening and the, let me take a different color now, okay. So ji haan, the opening and the closing stock of the year was 200 lakh and 250 lakh respectively, and they were overvalued by 10%. In the previous question paper, means this June attempt, there was one opening or closing stock, either one was overvalued and the other was undervalued. In this, both the cases, both the stock opening and closing, both are overvalued, okay, by 10%. So either we can we can adjust either taking the difference or individually, okay. We will see in this question, okay. And this also comes in past previous question paper, this point was also come, okay. Provision for the gratuity based on actuarial valuation was 5 crore. As I told you that we are not going to take the actuarial valuation which is on gratuity based wala point, okay. And actual gratuity paid was 3 crore, which is unpaid is going to be what? 2. We are going to take the difference here, okay. So there is case law related to this point also. Yes, let's go for the other. Says about the 11th point, says the commission of rupees 1 lakh paid to whom? To the recovery agent. 1 lakh commission is paid and tax has been deducted and remitted as per chapter this of this act, okay. So yes, there would be adjustment of this point also. And 12th says about the company has purchased 500 ton of industrial paper as a packing material at a price of 30,000 ton from PQR, a firm in which majority of directors are partners, which means they are related person, na? Yes, PQR normal selling price is this and they are selling at 30,000, okay. And what is the normal rate? 28,000. What would be the difference? We are going to take the difference, right? And what would be the section? You have to think, comment below if you know the section, okay. Yes, so yes, we are going to take the difference between these two and multiply into the quantities, okay. Now there comes the main thing. As this part they are saying additional information, there was a addition to plant and machinery of 50 lakh on 10th 6 2022, okay. 10th 6 2022. So we have to determine whether they have completed 180 days or not, okay ji. The company has credited a subcontractor of amount of 8 lakh to the repairing of plant and machinery, and tax so deductive was remitted on 31st 10 2022. So yes, which means 30% is going to be disallowed now. Yes, the company has collected 10 lakh as a GST from its customer and paid the same on the due date. But there are some additional thing mentioned here. However, on an appeal made, the High Court directed the GST department to refund the 3 lakh. From this, let me say it again, the company has collected 10 lakh as a GST from the customer. Okay, so they have collected 10 lakh from the customer, and even they have paid the before due dates and all. Okay, they have cleared the dues and all. Okay, but the High Court directed the GST department to refund that money. Okay, refund of 3 lakh to the company, right? The company in turn refund the 2 lakh to the customer, from whom the amount was collected, and balance 1 lakh is still lying under the head current liability, which means iska we are going to take the difference and we are going to do the adjustment of this part. 3 lakh minus 2 lakh, which means 2 lakh was refunded to whom? To the customer, and 1 lakh was actually lying in the head of current liabilities. Okay, so yes, compute total income and tax payable, ignore MAT provision and provision of section 115 BA, BBA वगैरह वगैरह. ठीक है, this was BAA वाला है. Okay, so as per 115 BA we are going to take. Okay, so let me tell you, before going for solving this question, let me tell you, in this chapter, from this chapter, right, as I told you in previous June attempt, there was a question where we have to solve by both the sections. Okay, we have to identify, ascertain the tax liability as per both the sections. Okay, so yes, we have to go through the question well, first of all. Okay, because sometimes what happens, we don't know what is actually asked in the question, and we start solving the question. So first of all, go read each and every point twice or thrice. Okay, so that 15 means it's very crucial before starting the exam, right? We get a paper to read, so we have to decide which question we should go first. So yes, we have to read it very carefully. Okay, so yes, these are the things which I already told you, and now we are going for solving the question. Okay, so as I know this part, this provision, the net profit of this company we are going to take, right? Yes, so as per profit, net profit as per the P&L account which is mentioned in the question, 700 lakh is to be taken. Okay, no adjustment, बहुत simple है जी हाँ. So yes, we have to add item debited but to be considered separately or disallowed. Okay, as I told you, very first point, depreciation calculated on the basis of useful life of asset as per provision of the company is 50 lakh. So this part is going to be add back. This depreciation is to be add back. Okay, so yes, we have add back a depreciation as per the account. Let's go for working note number 1. Okay, what is the working note saying here? Okay, so as per first working note, the company engaged in business of manufacture of fertilizers is eligible for the deduction under section 35 AD. Kitna percent? 100% of the amount of capital expenditure. So this 50 lakh shall be eligible for the deduction under section 35 AD. Okay, इतना समझ में आया? जी हाँ. Okay, so from this I'll continue later. There is some other point. Okay, so yes, let's take it. Okay, itna was clear to us. Okay, let's go for the second point. As they are saying, the normal depreciation calculated as per the income tax rule, which is to be deducted, right? So I'll take this point later. Give me a few more time, guys. I'll tell you later. Let's go for the second part. Okay, third point. Where they are saying the employer's contribution to EPF of 2 lakh together with the employee's contribution of rupees 2 lakh for the month of was remitted on 8th of May. In this case, and I'll tell you, this point was also in the past June attempt, in this June attempt 2024 wala. So yes, so there are almost 3 or 4 or more than points covered in this lecture. Okay, in this particular illustration. So yes, we are not going to take employer's contribution here. We are going to take the employee's contribution. Okay, so yes, let's go for it now. Here, employee's contribution to PF is to be add back, but why? Okay, so we have to identify now. Okay, So yes, the working note number 2 says the employee's contribution are liable only if, okay, as I told you, if it is paid before due date or on due date. And what is due date? As this was of March, so next 15th April, ठीक है, and grace day 5 days is to be allowed, ठीक है. If it is paid within that particular time, specified time, in that case that is going to be allowable. Employee's contribution is to be allowable. If not, in that case that is not going to be allowable. Simple है जी, हाँ जी. So let's go for this working note. Employee's contribution allowable only if paid by the due date of the fund. So as per section 36 subsection 1 clause 5th A provides that any being defined to mean the due date prescribed in the relevant law dealing with the fund. In this case, for the contribution of the March 2023, the due dates under PF Act was 15/4/2023. As I told you, plus 5 days grace days is allowed. Okay, so what is going to the due date? 20 of April 2023. Since it has not been paid by due date, the same is not going to be allowable as a deduction. So yes, there would be confusion related to this point. Which point? Employer and employee contribution. We are not going for the employer contribution, guys. We are only going for the employee's contribution. Okay, it is going to be allowable if it is paid before the due date. The PF wala due date is going to be 15th of next month, which is 15th of April now. Okay, 5 days is grace day is going to be allowable within that particular time period. If it is paid, if it is remitted, in that case that this is going to be allowable, employee's contribution. But in this case, this was remitted on the 8th of May, right, which means 2 lakh is to be add back, ye bhi add back and ye bhi add back. ठीक है जी, हाँ जी. So let's see whether they have add back these things or not. Yes, employee's contribution to PF is add back. Okay, so let's go for the third point. The company appended a note to the fourth. The company appended to a note to its income statement that the industrial power tariff concession of 25 lakh was received from whom? The state government, and it is treated as same as capital receipt. As we know, this is not going to be the capital receipt. This is going to be the revenue receipt, and we know what would be the adjustment. Okay, so let's see what would be the adjustment in this case. Industrial power tariff concession provision, this is going to be the working note number 3 is going to be add back. So yes, as per this High Court in CIT versus Rasi Cement Limited, this is a case law. So yes, I'll tell you one more thing. Go for the case laws and all. Okay, you have to mention the case law if you have already prepared for it. Okay, so yes, that give a weightage. Definitely we are going to score more. The High Court in CIT versus Rasi Cement Limited held that the power subsidiary received by the SEC from the state government on the basis of the actual power consumption has to be treated as a trading receipt, right, not the capital receipt. So yes, let me read it again. What was the given in the question? This is 25 lakh. Okay, the company appended to a note to its income statement that the Indian power tariff concession of rupees 25 lakh was received from whom? From the state government. They have treated as capital receipt. In actual, that is to be treated as the trading receipt, not the capital receipt. Okay, yes. So in the I have taken 2,50,000 here. Okay. So in this question, this is 25 lakh. So let me write is 2,50,000 here now, because the calculation I have already done it, and that would be, create a mess for us. So let's go for the fifth point. Fifth point says the company had provided an amount of rupees 25 lakh, being the sum estimated as a payable to the workers based on the agreement to be entered with the workers union toward periodical wage revision once in 3 years. The provision is based on the fair estimation on the wage and probable revisions. Okay, so as per this point, the ye wala part, ठीक है. The provision for the wages based on the fair estimation on the wages and probable revision is not going to be added back. ठीक है. As I told you that if any of the obligation arises from the past event and this is particularly belonging to the past event, ठीक है, the present obligation is actually arising from the past event, in that case that would be allowable as a deduction. Okay, so let's go for the working note number 4. And a provision is deductible if it is present obligation resulting from the past event, okay, which may be required outflow of resources to settle and reliable estimate may be made. So yes, there is a case law, Rotor Control India Private, this is private limited versus CIT. Okay, alternatively there is one more possibility, we can also go for that, okay, but in this I have taken as allowable deduction, okay. Second possibility is, since it is stated in the question that the provision is based on the probable revision, it is possible to take a view that the ICDS 10 will apply and hence the provision is not applicable. Okay, so since ICDS 10 requires a reasonable certainty and for the recognition of a provision, if this view have been taken, in that case the provision will be disallowed. Okay, so you guys have the right, you can either go for first option or second, but it is to be mentioned in the, you have to make a working note. Okay, you have to mention in your working note, we are going to assume as this or not. Okay, so there are two possibilities, either it's going to be allowed, okay, if it is actually the present obligation actually arise from the past event. Okay, so we have assumed it from the first case. And what is the case law? Rotor Control India Private Limited versus CIT. and पहला वाला कौन सा था? ये वाला, ठीक है, जिसमें ट्रेडिंग रिजर्व वी हैव टेकन, CIT वर्सेस राशि सीमेंट प्राइवेट लिमिटेड, CIT वर्सेस राशि सीमेंट लिमिटेड. Okay, so yes, up to this hope so everything is clear. So yes, let's go for the other point guys. ये वाला point is cleared. Yes, so ये वाला point was clear. Let's go for the 6th point. The company has made, nothing is to be done here, right? So let me cross this. The company had made a provision of 10% of the debtor toward bad and doubtful debt. Total sundry debtor of the company is 200 lakh. I am going to read 7th point also because somehow it is connected to this. A debtor who owned the company and an amount of 40 crore was declared insolvent and hence was written off. So we are going for 2 point. Okay. So yes, let's go for first. Provision for the bad debt and doubtful debt is going to be 20 lakh. How they are going to take this? Let me read it again. As they are saying, the company had made a provision of 10% of the debtor. 10% of konsa, 10% of ye na. They are saying 10% of its debtor toward the bad and doubtful debt, and they are having the total debtor of 200 lakh, which means 10%. ठीक है, 20 lakh, simple है. So this is to be add back. ठीक है. But what about this? They are saying 7th point, let's read out. The debtor who owned the company an amount of 40 crore was declared insolvent and hence was written off. What would be the adjustment in this case? Let's go for it guys. So yes, this part was cleared. So actual bad debt, this was of 40 crore. Okay? So both point is going to be covered in working note number 11. So let's go for it now. जल्दी करते हैं. कहाँ है ये रहा. So yes, deduction for bad debt is going to be under section 36 subsection 1 clause 7 is allowable only the year in which debt is actually written off, right? In the book of accounts. Yes, we know 10% 20 lakh was actually allowed, na? Yes, actually we written off. Okay, mere provision for the bad and doubtful debt shall not qualify. What are they saying? Shall not. Let me take a red pen, hai na? Provision for the bad and doubtful debt shall not be qualified for the deduction, and what is required is actual write-off. In what case? Therefore, the provision for the bad debt allowable is not deductible under section A, and therefore 20 lakh being 10% is to be add back. Yes, we know this. Okay, but what about the 40 crore? Since the actual bad debt of 400 lakh has already ठीक है, already debited in P&L. That's why we are not going for making any of the adjustment. Okay, so what I told you, 20 lakh is going to be add back. Now we know the reason. Let me read it again. They are saying, may the provision for the bad and doubtful debt shall not be qualified for the deduction, and what is required in the actual written off. Therefore, the provision for the bad and doubtful debt is not allowable in this case. Okay, and 20 lakh being 10% is to be add back. Okay, so that is only allowable. First of all, bad debt is only allowable in which year, in which the in that year which it was actually written off. Otherwise, not going to be allowed. Okay, hope so this point was clear. And why we are not going for 40 crore? Because this was actually adjustment made earlier. So let's read again na that wala point. So Yera, they are saying a debtor who owned the company an amount of 40 crore was declared insolvent. Okay, and hence was written on when it was declared insolvent earlier. In that case, adjustment was already made earlier. Okay, so yes, let's go for the 8.8 says about the sundry creditor include an amount of 50 lakh payable to whom? To ANC. Okay, and supplier of raw material which is remain unpaid and 75% of discount was now given. Yes, so let's go for what is going to be the rate amount here. Okay, so yes, as we have taken discount given by the sundry creditor, we are not going for any of the adjustment. But why so? Okay, so we have to identify what was the reason. In this case, we are not going to take the amount, the discount actually given which is to be paid. Okay, amount waived by the supplier of raw material is deemed income. Okay, let me read it again. Amount waived by the supplier, as they have to pay some amount to a person, right, to the sundry creditor, and that amount was waived off, and that waived amount is going to be income. Okay, that waived amount is going to be deemed income as per section 41 subsection 1, as expenditure was allowed as a deduction in last year, and there is a benefit by way of remission or cessation of trading liability. It is assumed that the same has been already credited to the P&L, hence no adjustment is required. Let me read the question again, the point again. Okay, where they were talking about the sundry creditor. Okay, as in the question they have mentioned the sundry creditor include 50 lakh which is payable to whom? To ANC, and towards the supplier of raw material which remain unpaid due to the quality issue. An agreement has been made on ye wala date 31st/3/2023 to settle the amount of 75% of the outstanding. This was the discount. Okay, as this have actually occurred earlier, if it is occurred in this time, in that case we are going to take that amount, but as they have already made the adjustment, then why we are going to take this point? Okay, so yes, we are not going to take the sundry creditor wala point. Hope so this was also clear to you. Let's go for the other point. This says about the opening and the closing stock of the year 200. This is going to be opening. Okay, and 250 is going to be 250 lakh is going to be the closing stock respectively. They were overvalued by 10%. So yes, either you can individually make the adjustment or by taking the difference. Okay, in this case I have taken the individual. Okay, so yes, let's go for what I have taken as opening stock overvaluated is going to be add back. Okay, and what about the closing stock is going to be deducted, that is overvalued. In this particular question, both opening and closing stock was overvalued, but in this June attempt wala question, one stock was overvalued, the other was undervalued. Okay, so yes, in this case when both the stocks are overvalued or undervalued, either both I mean saying either both of them are overvalued or both of them are undervalued, in that case only we are going to take the difference, otherwise no. Okay, so don't be confused in this case. So yes, let's go how working note number 9 we have calculated. Yes, as per the opening stock we are having 200 lakh. So yes, 200 lakh we are going to take the 10% and it is overvalued, which means 110. Okay, yes, 200 lakh into 10%. 10% is the amount which is overvalued. Okay, and total amount which is going to be 110, 100 plus 10. Okay, hope so this is clear to you, which is to be divided by, yes, so we'll get an amount of 1818181. This is going to be add back. Okay, 1818181 is to be add back. Okay, so what about the closing stock? Closing stock was of 250 now. Okay, the same thing is to be followed. Okay, 10% divided by 110. Okay, and that is going to be 2272. 2272727. Okay, and how we have calculated? 250 lakh into 10% divided by 110. Simple hai. Okay, either we can go for individual adjustment or I can also go for this part is to be deduct ye wala, then difference is going to be add back. Let's see kaun sa wala part is playing the major part. ठीक है, 1818181. ठीक है, in this case this was overvaluing. ठीक है, overvalued, which means 454546 something is to be deducted as this is higher, the closing stock is higher from the opening. Okay, so yes, so let's go for the treatment in the question which I have mentioned. Okay, so ये रहा, the overvaluation opening stock is 1818182, round off कर लिया है, and second वाला overvaluation of where is that part, let's see, ये रहा, overvaluation of closing stock. ठीक है, 2272727 is to be deducted. Okay, is to be deducted. Okay, this is going to be covered under the deduction allowable by the computing business income, which is to be deducted. Okay, hope so up to this is clear now, guys. Let's go for the other point. Provision for the gratuity based on the actuarial valuation was of 5 crore. ठीक है, and the actual gratuity paid was 3 crore. As I told you, we are only going to take the uncertain actual valuation of gratuity. ठीक है, so we are going to take the difference, as they have mentioned that 5 crore was the total amount and actually gratuity paid was 3 crore, so definitely we are going for the 2 crore. ठीक है, so we are going to adjust that 2 crore, that is to be add back. Okay, so ये रहा 2 crore is to be add back. So let's go for the working note number 5. What is mentioned there? There is one case law also. As under section 40 subsection 7, no deduction is allowable in respect of any of the provision made by the payment of gratuity to the employees. However, gratuity actually paid is admissible as deduction. Therefore, provision for the gratuity of 5 crore is to be disallowed. Actual gratuity paid 3 crore debited to the provision of the gratuity account is allowable. In that case, only the net sum of 2 crore is to be add back. This is not going to be allowable. Okay, yes, allowable as a deduction. And this is one of the case law, CIT versus ECGN Forging and Private Limited. So this was the case law related to the gratuity wala. ठीक है, and yes, let's go for the other part. The कौन सा वाला part होगा अपना? I guess 11. Yes, the commission of 1 lakh paid to the recovery agent for the realization of bad debt. ठीक है, tax has been paid. Okay, deducted and remitted as per the chapter 17B of the act. So what would be the adjustment as per you? You have to think before. ठीक है, so yes, I'll tell you, but in this case we have not taken. But why so we have not taken? So yes, let's go for the 6th working note. Commission of 1 lakh paid to the recovery agent for realizing of all outstanding is allowable expenses under section 37. That's why we have not taken it. Okay, and there was one of the case law, DCIT versus Super Tannery India Limited, which was related to this particular point. ठीक है, where the commission was actually paid to whom? To the recovery agent, and this is going to be allowable as deduction. Okay, commission paid to whom? To the recovery agent is going to be allowable, and even they have mentioned about the TDS is paid or not, there would be some clarification. Okay, yes, so hope so up to this is cleared. So let's go for the major part which is covered, and there is one more point of which is of 12th. the company has purchased 500 ton of industrial paper as packing material at the price of what, 330,000 ton from PQR, and a firm in which majority of the directors are partner. PQR normal selling price in the market for the same material is 28,000. So definitely we are going to take the difference 30,000 and 28,000, okay, and that is to be multiplied by the 500 ton, okay. So that is going to be 10 lakh. So yes, that is to be add back or deducted. Yes, this part is to be add back, but what was the section mentioned as per this provision? We have to mention that in the working note also, okay. So if you go through this June attempt or past previous year question paper which is particularly related from this chapter, they have specifically mentioned that you have to go through the adjustment and working note. On that basis you are going to get the marks, okay. So yes, these working notes are very precious for us, okay, precious as diamonds. Okay, G. Let's go for the 7th working note. If a SSC incurred any of the expenditure for the which payment is made to the specified person and the assessing officer is of the opinion that the such expenditure is excessive or unreasonable having regard to the fair market value of the goods, services or facility for which the payment has been made, then such excessive unreasonable part of the expenditure will not be allowed as the deduction in this case, okay. So that the treating the assessing company and the PQR as a specified person as some of they was having the relation of related party, okay. Under section कौन सा 40 subsection 2, so the section is 40 subsection 2, this amount is going to be disallowed here, okay. 30,000 as the fair market value outside was 28,000 and to the related party was 30,000. So the excess amount is going to be disallowed here, okay. That is 10 lakh. Alternatively, the second option, it can be assumed that the firm in which majority of the directors are partner do not come within the ambit of specified person unless such directors have hold 20% of the or more of the profit sharing the firm. In that case, no disallowable would be allowed would be under as per section 40 A subsection 2, okay. But there is one specification if that is not going to be disallowed, and the specification says that the partner, the directors, the partner do not come, okay, within the ambit of specified person unless such a director hold 20% or more of the profit, okay, 20% or more of the profit sharing in the firm, then only. But in this case we have taken ऊपर वाला first वाला option, ये वाला, ठीक है. So this part is going to be disallowed, okay. So yes, that is going to be yes add back. So this part is add back. Hope so up to this is clear, okay. So let's go for the additional information. So up to this we have already we have adjusted those points which is actually already either debited or credited. Now the question is specifying that this is the additional information, which means they have not done the adjustment, okay. So we are going to do the adjustment. There was a additional plant and machinery amounted 50 lakh on 10/6/2022. So what would be, there would be some depreciation wala part related to this, okay. So yes, let's go for it now. Yes, so as I told you, this part was allowed 35 AD wala, right, and normal depreciation calculated as per income tax rule is to be deducted, but there would be some adjustment done. So we have to check out what is going to be that adjustment in this case, okay. So yes, we are going to deduct now. Now few of the items is only remaining, which is to be add in the adjustment. Now we are going for majority less wala part, which is to be deducted, which is allowable while computing the business income. So yes, depreciation as per income tax rule is to be deducted, but what I told you, there is some of the other adjustment. So let's go for the remaining portion, remaining part of working note number first, okay. As I told you, we have covered this. It is assumed that the normal depreciation, let me read it again, okay. So the company engaged in the business of manufacture of fertilizer is eligible for the deduction under section 35 AD. at the rate of 100% of the amount of capital expenditure. Yes, we know this. ठीक है, therefore 50 lakh shall be eligible for the deduction under section 35AD. Hope so this was clear. It is assumed that the normal depreciation 15%, कितना percent? 15% on the new plant and machinery. New plant and machinery 50 lakh पे ना, as let me go back. ठीक है, in the additional information they have given that there was an addition to plant and machinery amounted to 50 lakh. Okay, so this part is specifically saying about it is assumed that the normal depreciation, which is 15% of new plant and machinery in respect of deduction under section 35AD is availed and is included in 80 lakh, 30 and therefore the same has to be excluded and balance depreciation of 72.50 is going to be allowed. 72 lakh 50, ठीक है, is going to be allowed. But how they have computed? Let me tell you. 50 lakh का 15%, which is 7,50,000. 15% is the depreciation rate, right? 50 lakh ka 15% is going to be what? The 7,50,000. And from that 80 lakh we are going to deduct this. For what purpose? For computing the total income as per this specified business wala 35AD. So we have 70,50,000. Okay, so this is going to be deducted, okay, as a depreciation. A loan should be allowed as a deduction under section 32. And second point, alternatively 50 lakh being addition to the plant and machinery of 10/6/2020 qualifies for additional depreciation of 20%, and since this is at the rate, okay, and since only the normal depreciation as the income tax rule has been debited to the P&L account, additionally depreciation of 10 lakh being 20% of the 50 lakh has been deducted while computing income. In such cases no deduction shall be admissible. Okay, so further in this case they have said that additional depreciation is not going to be allowed in this case. Okay, 35AD wala when it comes to this wala part. Okay, so yes, we were doing the less wala part, so we know how we have computed the depreciation, that 50 lakh, okay, which is to be 15% depreciation is going to be allowable, that is to be deducted from the 80 lakh. Okay, so we have 70,50,000 and deduction under section 35AD now we know. Okay, so this again is to be deducted 50 lakh, which is covered in working note number 1. Yes, we have covered the overvaluation of closing stock again, and what is they saying? Let's go for the remaining portion now. So ये वाला part हो गया. The company had credited a subcontractor on amount of 8 lakh. The company had credited a subcontractor on amount of 8 lakh on this day toward the repairing a machinery component. The tax was deducted and remitted on 31st/10/2002. Now what is going to happen? As I told you, 30% is going to be disallowed. 30% of what? 8 lakh. ठीक है जी. So let's go for the adjustment which is done in this case. 30% is going to be 2,40,000. So yes, ये वाला payment made to contractor as it was remitted on that day. That's why 30% would be disallowed. ठीक है. So 2,40,000 is to be reduced, to be deducted. So yes, we have 2,40,000. Let's go for the working note number 12, which says the according to section 40 subsection A clause 1A, payment to resident on which the tax has not made deducted paid up to the due date on furnishing return, 30% of such sum shall not be allowable as deduction. In simple way, 30% would be disallowed. Okay, yes. However, 30% of sum shall be allowed as deduction computing the income of subsequent previous year in which it has so deducted and paid. Okay, so hence in this case this 2,40,000 is not going to be allowable as a deduction. So yes, hope so this point was also clear to you guys. Okay. So yes, majority we have covered. We have remaining 1 point of GST refund. Let's go for it. ठीक है. However, an appeal, ये रहा यहाँ से. The company has collected third additional information. The company has collected rupees 10 lakhs as GST from its customer and paid the same on the due date. Okay, so they have collected kitna amount? 10 lakh. However, on an appeal made, the High Court directed to the GST department to refund the 3 lakh to the company. The company in return refunded 2 lakh to the customer, which means 1 lakh is with that company, right? Yes, from whom the amount was collected, and the balance of 1 lakh is still lying under the head current liability. So yes, we are going for the adjustment of this part. Okay, so the GST refunded, not refunded to the customer, is to be add back. Okay, but why it's to be add back? Let's go for the working note number 8, the last working note. Okay, so GST collected by the SSC is to be treated as what? The trading receipt, okay, of the company of the SSC as held by the Supreme Court in the case of this Chowringhee Sales Bureau Private Limited versus CIT. Okay, so the GST paid by the SSC is to be deducted from its profit if any of the deduction is so allowable, and subsequently the GST is refunded by the government. The refunds so made shall has the character of the revenue receipt. However, the amount is taxable as the deemed income under the section 41 subsection 1. However, the SSC is entitled to claim deduction on the amount refund of the GST as and when the same is refunded by the SSC to the purchaser. In view of this, amount yet not refunded to whom? To the customer, it's not deductible. Okay, so hope so this point was clear. So this is going to be add back. This 1 lakh is to be add back as it was not paid to the customer. Okay, so this point was also from past to past previous question paper. Okay, so hope so this was clear. So let's be quick now, guys, and let's do we have done the adjustment. Okay, so let's calculate now. Okay, so we are going for yahan se we have 50 lakh, 2 lakh, 2,50,000, 50 lakh was of depreciation, 2 lakh was employees contribution. Employee contribution नहीं लेंगे, ठीक है. Employees contribution is to be deposit कौन सा due date 15 of next month, 4 days grace days, ठीक है. Within that total grace day and due date, if it is paid before 24th next month, right? मार्च का 4th, ठीक है. मार्च का नेक्स्ट टाइम ड्यू डेट इज गोइंग टू बी अप्रैल, ठीक है. सो विद इन दैट टाइम पीरियड इफ इट इज पेड, इन दैट केस दैट इज गोइंग टू बी अलाउबल एज डिडक्शन, अदरवाइज इट इज नॉट गोइंग टू अलाउबल, ठीक है. इंडस्ट्रियल पावर टैरिफ कंसेशन इज टू बी टेकन. ओके, सो यस 2,50,000 वी हैव टेकन. एंड व्हाट अबाउट दिस wage and probable revision? If any of the present obligation arise due to the past, even in that case that is going to be, there was one or another point, okay, but in this case we have taken this option. So yes, we are not going to take and we are not going for any of the adjustment. Whatever the provision, we are going to take the provision of the bad debt, which is 20 lakh, and discount given by the sundry creditor which was waived off, right, as that was particularly related to the previous years, okay, and adjustment was already done. In that case we are not going for doing any of the adjustment in this question. Okay, overvaluation of the opening stock 10% divide by 1 by 10, 110, ठीक है जी, which is to be add back. And another adjustment was either taking off the overvaluation of opening and closing difference. Okay, yes, and GST refund not refunded to the customer, right? Yes, which is to be add back 1 lakh. And what about the provision of gratuity? Unascertained gratuity is to be taken, ठीक है, is to be add back, which is 2 crore. Yes, and the purchase of industrial power as a packing material, excessive wala amount is going to be disallowed, and that is going to be add back. Okay, so 30,000 less 28,000 into 50, ठीक है, मतलब 500 जी. So that's 10 lakh. So yes, that is 30, 36, 81, 82, in which we have to add the total, the net profit. And what is going to be the total amount? 10,03,68,182. Okay, hope so up to this is simple, clear to you. Let's go for the other part where we are going to deduct the some of the allowable particulars from for computing the business income. Okay, now we know what is going to be the depreciation, right? 80 lakh में से we are going to deduct, right, 15% of 50 lakh. Okay, so that is what 72,500. Okay, yes, let's go for the deduction under section 35 AD, which is 50 lakh. Okay, so yes, we know now why we are taking this. Okay, this is to be deducted. Overvaluation of closing stock is to be reduced, right? What if this is undervalued? Then in that case we are going to take a vice versa cases, matlab the opposite adjustment. Okay, so this is 22,72,727. Okay, what about the payment to contractor? In this case 30% was disallowed na? Yes, so 240 is going to be disallowed. So we have 85605,455. So this is 85605,455. Okay, as we have the total income which we have taken the rounded off, so that is going to be 85605,450. And as the question says the turnover of the previous year is 405 crore, which is more than 400 crore. If it was less than 400 crore, in that case what is going to be the taxable rate? 25%. But in this case what is going to be the taxable rate? 30%. So hope so this is also cleared now. Yes, so we are going for the 30%, which is 25681,635. Okay, surcharge is to be added, right? We know this. So 1797714. Okay, so add back the total taxable amount. So we have 274,79349. Okay, and HEC, which is the important part which for computing the taxable liability, 4%, 109 and 174. So 285,78520. 2 crore 85 lakh 78,520 is going to be total tax amount. Okay, now let's go for the question. They have said not going for the provision, okay, not going for the provision of this 115BAA. But what if they have said you have to go for the both of these sections, 115BA 115BAA, बा ठीक है. सो बा वाला कौन सा रेट क्या था? जल्दी 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 बताओ. 22%. ठीक है. Let's assume it's less than 400 crore. The turnover was of previous year is going to be less than 400 crore. Let's take 395 crore, which is less than. ठीक है. In that case, what is going to be the rate? It is going to be 25%, right? 115BA. Okay. Now, ba wala, as per ba wala section, what is going to be the rate here? Oh, my handwriting. Oh. Okay, 115BAA wala, ba wala section, it is going to be 22%. Okay, so yes, from this June attempt, there was some question where we have to compute the income as both of the section. Okay, so we have to tell what would be the tax liability as per this section and this section. Okay, hope so everything was super clear to you. It was easy. It was a little bit lengthy question, otherwise there was nothing as much difficult in this question. But yes, there was some 4 to 5 point which have actually come from last 4 to 5 previous year. Okay, so this question was very important for us and which actually given us a very clear version. Okay, hope so this was clear to you. And what you have to do your consistent revision, guys. Hope so I'll come. I think we should do one more illustration. So next lecture is going to be 1 or 2 illustration of this chapter. Okay, hope so this was easy busy to you. If it was useful for you, if it was informative to you, what you have to do, hit the like button, subscribe my channel and share this video to those who are doing CA, CS, CMA aspirants. Okay, ji? Especially to CA and CMA aspirants. So yes, like सब हो जाएगा ना. चलो ठीक है. So we'll meet tomorrow. ठीक है. So do your revision, guys. Okay. चलो तब तक के लिए doodles. Bye.